Hello friends, welcome to the next lesson. In this session we're going to learn about the margin requirements and everything. In the previous lessons we have gone through our order types, in which we have seen buy today sell tomorrow BTST. We have seen the cash and carry option CNC. We have seen the MIS. Maybe I missed out the explanation of that. It is a margin intraday square of, as I explained before. MIS is an intraday, means at the end of the trading session the automatically our open positions will be closed. As shown in the before, once we go with the MIS or CNC, we have options like market order, limit order, stop loss order, or stop loss market order. SLM is nothing but stop loss market order. So we have gone through each and everything before the class. I just want to revise this, which is very much important. This is the basic outline of the order book, which is almost similar in every broker. So now we'll go through the most common words, because which is much more related when we start the trading. So whatever the position we open, that has to be closed. Once that closing is known as a square of in the terms of stock market. In stock market, the closing of any trade is known as a square of. So we have another point is known as a bid price and ask price. This I will explain in showing the market depth concept. Let's keep that aside as of now. We'll see another thing as OHLC, which is known as a short form of open, high, low and close. Means if at any point of time for any script there will be an open price, there will be an high price, there will be a low price, and there will be a close price. That also I will show you the live in the broker terminal. So what is a bull market? This is important. If the stock is moving upside continuously, it is known as a bull market. There is another thing which is known as bear market. Means the stock market or the any particular script is moving down from its general price or opening price. It is known as bear market or bearish. In bull market is known as bullish. And apart from these two, we have another term is known as sideways. Means it neither goes upside or neither goes downside. It just swings up and down, and this shows the indecision of the investors or traders in the market. So apart from that, we have a long position. Long position means if we buy any script and holds it for a longer term, it is known as a long position, a long or bull, and our view is known as bullish view, and vice versa is known as short position. Means we sell the script before we hold the stock in our thing. This is an intraday position or futures and options position. Such a script and is known as a short position, and that view of that particular script is known as bearish view. Okay, now we'll cover this topics of square of bid price, ask price, OHLC now directly in the broker terminal, which gives a much easier view on them for you. Yes, coming to this, this is the terminal. As I explained, we'll go with the explanation of the terms of square of. I explained a square of means we are closing the current running position is known as square of. What is a bid price and ask price, that will show you now. This is the live market. As commodities are running at even 10 o'clock, we'll see it in there. If we click the market depth, we can see the bid price. Here see the offer price. Offer price means it is the offer which is available. It is also known as ask price. It is when we are buying, we want to buy at this available ask price, but what we are going to buy is known as a bid price, but don't confuse with that. So clearly, if we want to buy a particular script at a certain quantity, we have to see this best available offers, means this is the prices which is offering in currently in the market. Let's take example of some brinjals. Counter 1, it is available at 933.50 paisa, 60 paisa, 70 paisa, 80 paisa, 90 paisa, like that. There are a number of different counters and the price is changing, but based on the quantity required, here if you have only 2 kgs, we can buy only at 60 paisa 2 kgs only, but we need 6 kgs, then we have to buy another 2 kgs at 70 paisa, another 2 at 80 paisa. We can't go directly for 934 rupees for the 6 quantity, because the best available is here. Here we'll get at a cheaper price, so we'll go at the top available prices first. So this is the ask price, means they are asking this price to sell this particular quantity to us, so this is known as ask price. So similarly, if you want to sell what you are holding, that will be shown in the offer price for another trader who wants to same time wants to buy the price particular stock, and vice versa is known as bid price. Bid price is the price where we are willing to sell our available uh, stock, means this is the price where the market is willing to buy our stock. So this is known, they are bidding, they want to buy 8 quantity by someone at 60 paisa, they are asking at this price, means that is known as they are bidding for that particular thing at this price. So this much quantity in this many orders, they are asking at this price. So we will get, if we want to sell, this is the market price we are going to get for our stock availability. So see, if you observe the major difference in the bid price, the price is going to reduce, whereas in the ask price the price is going to be in an increasing order. So we go down, the price is increasing. If you want to sell more, the price is going to decrease. If the want to buy more, the demand is increasing, so the price will going on increasing. This is the basic major difference. And I want to cover one more thing, which is known as OHLC. See, let's say this is the price. I'll give it as an 1-day view. Okay, let's take this. I'll zoom this. Okay, this is the available price at this price on 22nd of August. What is the open price is 4,633 rupees, and the highest it has been reached is 4,773, and it has closed at 4,763, but the low, maximum low, it has reached at 4,633. that means open and low are same here in this particular day. If we see this here, the open and the close is very much different. In this red candle we can observe, if you observe, the open and high are same, but low and close are very much different. See, the price has been reached this point and retraced back and closed at this particular point. We will learn about this particular charting and this candlesticks and everything in the charting softwares, that very much different, and that is very deep analysis of the stocks and technical analysis. So that's will not will consider cover in this basic course. but this is the basic thing which we need to understand, that open, high, low and close, which plays a major role in the our strategy planning and everything. If you have anyone having some queries that what are these lines and everything, this is the technical analysis based on my strategy. Some strategies I have built some of the columns, and using some of the indicators and everything, I build some strategies and I use them. See, this is the different views I have saved. These are the most common words which we have learned till now. So we'll go into the next session. In that we'll learn about the trading day. Trading day, as I explained, from morning 9 o'clock to evening 3:30, it is known as a trading day for the NSE and BSE, and whereas till 5 o'clock it is trading day for the currency, and till 11:30 it is for the commodities market, 10 to 12:30. Those are the timings, and that is known as the trading day. The transaction day is called as a trade date, and such day is known as T. T day. It is denoted with T. Remember this, in every contract you receive, you will see this T date. I mean, this is the transaction date. So at the end of the trade day, we will receive a contract note from our broker, whoever we are opening the thing, whatever the purchases we have made and everything, will receive such contract explaining each and every breakup in that agreement. It's like an agreement. And if you buy any share, the same will be reflected in your demat account by the end of the trading day plus other 2 working days. T plus 2, it is denoted generally by T plus 2, and all the settlements of cash and everything will happen in the T plus 1 day generally. But nowadays most of the brokers are offering at T plus on the trading day itself, but on legal terms it is a T plus 1 minimum. So as I explained, T plus 2 is the general stock settlements will happen. And also remember that there will be a trading day, there will be an settlement day. If you see any calendar of Zerodha or anything, I'll show you the one calendar on this. In this you will understand the what is some holidays I will show you on this. If we see, I'll show you this calendar of this. See, if you can see, you have trading and settlements process, which is giving in as an holiday. If it is both, it is a holiday on both the days. So upcoming we have it a holiday on 2nd, where we have trading day holiday and settlement holiday on occasion of our Mahatma Gandhi. It's on Mahatma Gandhi's Jayanti, so it's a holiday for trading and settlement for both NSA and BSE and even MCX stock. See, if you see in this Parsi New Year, we have a settlement holiday for NSE BSE, but you can still trade, we can still do trading and everything, we can invest and we can do that here. But MCX has no trading or not even settlement holiday. The settlements will happen. Next, our coming holiday is on 13th September. It is Ganesh Chaturthi. If we see, yes, here we can see only settlement is an holiday, but we can still on this day we can do our trading. And we have one more thing I have to remember on this 7th November we have Diwali, but on the same day there will be something called Muhurtam trading, which will happen for half an hour in the evening. The time will be decided by the NSE or a BSE particular stock exchanges, and will be notified on that particular time. Of in the half an hour we can do our trading and investments. There are many people sentimentally does the trading on this particular day. They will buy some of the stocks. So that's all much about the trading day. So next, coming to this, another thing is available segments in the market. What are the segments available in the market for us as a trader or as a investor? We have a capital market. Capital market segment means very offers tradable securities such as equities, preferential shares, warranties, exchange traded funds. Everything will available in this capital market. Equity means we'll buy the shares, and all the investors will fall under the capital market. So has a sub segments, instruments further classified, means common shares of a company are traded under the equity segments. It's also known as EQs. You can see EQ as a short form for the equity. As here we can buy and sell the shares of the company at the current market available prices, and such why it is known as a capital market. And we have another very high liquidity market, which provides most of the liquidity in the market is futures and options, and most of the traders in the market do around 70% of the people will do in the options, and remaining in the futures and equity. So such an huge liquid markets, that's why the potential and the risk in the options and futures is very much higher. So when you are a new entrant, I recommend you not to touch that segment straightly. First understand the basics in the equity market, then go for the futures and try it in with one lot or something like that, and then you can go for the options. Futures and our options are also referred as equity derivative segment only, but they are leveraged products, means that I will explain in the next session. Margin availability and everything. Leverage, what is the leverage means, if we have in this equity market, if we want to buy a share of 100 rupees share, we have to invest 100 rupees. And whereas in futures and options, there will be a margin amount, a span margin and like that, where we will invest only around 40 rupees, 60 rupees like that. And in intraday we will get much more thing that I will show you in the straightforwardly. You will understand more easily on that margin thing. There is another segment called as a wholesale debit market segment. As I explained before, we have different markets are there, like bonds, ETFs and everything, treasure bills, government securities, corporate bonds, corporate debentures, and everything will falls under this wholesale debit market, which is known as most of the mostly here the risk involved is very much less when compared to the capital market, and most riskier product available in all these segments, the most riskier is futures and options. So that's all about that thing. The margin for intraday and everything, we'll learn it in detail in the next session. Thank you.